Ladies and gentlemen, wealth managers of the future, welcome to our 6th annual INN8 Elephant in the Room event, where we re-examine the everyday, uncover the unknown, and help you, the wealth manager of the future, hold high-quality conversations with your clients. Hans Rosling was many things: a professor, a Swedish physician, academic, and public speaker. He was one of the most influential physicists and geographers of modern times. His book, Factfulness, published posthumously in 2017, has helped millions reset their long-held, often skewed beliefs. Hans was fundamentally a truth seeker, and he made it his life's work to reframe people's understanding of the world around them. The questions you may have seen scrolling while waiting in the webinar to start was one simple way to reframe your thinking. We used a sample from Hans's Factfulness quiz to prime your gray matter for change. For example, who knew that 80% of the world now has some level of access to electricity? Or that global extreme poverty levels have fallen sufficiently to allow most of the world to be currently found in what we refer to as middle-income countries? The world has changed significantly in the last 30 years. And today, we are going to explore how Africa might change in the next 30 years. The long-term economic prospects for Africa, the pitfalls, challenges, and opportunities. And my request to you, the viewer, is suspend your judgment, open your mind to new possibilities as we examine our inherent biases, learn new truths, and update our views on the often misjudged topic of Africa's future. But first, let me introduce our esteemed panelists. A warm welcome first to Charles Molapisi.
Thank you.
The CEO of MTN South Africa. Charles is driving MTN's Ambition 2025 strategy, transforming the company from a telecoms giant to a technology leader of tomorrow. His technological acumen has helped MTN secure its position as the most valuable brand in South Africa. Standard Bank close behind, I'm sure. We're excited to hear your perspective, Charles, and welcome to the panel.
Thank you very much. Thanks for having me.
Second is Sim. Thank you so much for joining us, Sim Tshabalala, Group Chief Executive of Standard Bank Group. Your journey to lead one of Africa's largest financial institutions is nothing short of inspiring. Career that spanned law, finance, and banking. You really embody the spirit of excellence and dedication. And given Standard Bank's strategic focus of Africa's our home, we drive her growth. Your insights will be invaluable today. Thank you for joining us, Sim.
Thank you ever so much, Michael.
Our final panelist, James Holley, the CEO of Traxtion, the leading rail services and solutions company in Africa. You're also a leading figure in Africa's rail industry today. And 14 years of experience have shown how you can transform Traxtion into the largest rail operator on the continent. Your vision for the future of transportation in Africa is both ambitious and inspiring. And Jamie, we're looking forward to hear your thoughts on the future of transport and infrastructure in Africa. A warm welcome to you.
Thanks, Mike.
Right, so some opening salvos. I'm conscious that our audience possibly doesn't engage as frequently as we do with the topic of Africa 2050, in particular your own unique perspectives as leaders of your respective businesses. So perhaps I could just ask you, Charles, to kick us off, and we'd love to hear, step us into the world of telecommunications, technology in Africa, and perhaps how MTN is viewing some of these exciting opportunities on the horizon.
Okay. Yeah, no, Mike, thank you. I mean, I guess the first thing is maybe just to give a background of my role in the business. And I joined the organization in 2009, pretty much, a key area for my growth. Spent 7 years in Nigeria, in Lagos working for MTN. And then after that, I did 3 years in Zambia as a CEO of operation. I had an opportunity coming back home to lead the technology of the business. So I was the group CTIO for 3 years, essentially driving everything tech, strategy, CapEx deployment, everything network and IT. So, and then I had then they put me into driving the MTN SA business from 2022. So very much embedded and sold on the MTN story overall. Our organization this year turns 30 years. Very, very important because this is the company which was born at the dawn of democracy in South Africa. So that's very important for us. I guess that's why we also make a very big bet about Africa. We're putting all our eggs into Africa, a basket. I think that's very important for us. So we are a Pan-African business in 17 markets, 295 million customers in total that we've amassed in just in a period of 30 years. Pretty much number one and number two in all the markets in which we operate. Workforce 17,000 or so. We've done very well, I think, if you look at the history of MTN just in the past 30 years. And we're optimistic about the future of the continent, I think, in terms of our role. And I think that's why one of the fundamental things that we always say is that, we want to deliver platforms for Africa's progress. So we now moving this business from a traditional GSM telco business to what people term technology or tech core business. That means that we now approaching the continent with a platform mindset in terms of how we segmenting our business, and I'll cover that maybe later in detail. But in essence, I think we see our role as transformational in the continent, particularly if you look at the evolution of technology, whether this is core technology on the GSM base or technology on the fiber side, on data centers, on AI. We believe that as MTN, we've got a very, very key role to play, and I think we're doing that already. Yeah.
Fantastic. Thanks, Charles.
Thank you very much.
If I could turn to you, you've covered this topic extensively recently at Africa Unlocked. So you're very familiar with the growth of Africa. Perhaps I'd like to invite you, just give an overview for the audience of Standard Bank's business in Africa and help orient us around this growth topic, some of the opportunities, challenges that you're seeing ahead for Africa.
Thank you very much, Michael. Standard Bank is a business that has got a balance sheet of 3 trillion rand. It made profits last year of 43 billion rand. Of that 43 billion rand, roughly 42% came from the operations outside South Africa. We employ 50,000 people. Of that 50,000, roughly 24,000 are here in South Africa. We are represented in 21 countries in Africa. The largest at the moment being Nigeria, where Charles spent a couple of years. And as it happens, I was on the board for a number of years of Stanbic IBTC, which services MTN in Nigeria. One of the countries in that group of 21 is Zambia as well. Those countries make up, including South Africa, they make up roughly 70% of sub-Saharan African GDP. We're not in the Maghreb, but we are applying for a rep office in Egypt, where we're looking for opportunities to service our clients who have an interest either in the movement of goods, money, and people between the Gulf states, Egypt, and East Africa, or corporates like South African corporates or car manufacturers who've gone to set up shop in Egypt, or pharmaceuticals we would be servicing. The examples I've just given you, in fact, we also service James and colleagues in Mozambique, because we're represented in Mozambique as well. The point of that story is we help people who have got operations and need to make investments or need ideas or need capital or need servicing as they run their businesses on the African continent. We've been around since October 1862, and we've been under the same name, except for one small difference. The name of the company when it was formed was the Standard Bank of British South Africa Limited. It's now the Standard Bank of South Africa. And we're very proud of that, with the same brand, the same name, same colors, blue, same history. And same passion for servicing our clients. And as I've said, we've partnered MTN, we partner ShopRite. You were making reference to the meeting in Cape Town, Naspers, all the great multinationals that are operating continent-wide. We are defined by our purpose. The purpose of Standard Bank is Africa is our home, we drive our growth. And we'll come back to this, but the fundamental thesis is that Africans are going to get healthier, wealthier, more productive, greater disposable income, more internet savvy. They'll be needing more infrastructure, more roads, more bridges, more rail. And they're going to need lots of the products and services manufactured and produced by South African corporates. And therefore, it's a fantastic opportunity for us to be participating in that growth, as we at Standard Bank say, contributing to the growth of our beloved continent.
It's very exciting. Thank you, Sim. James, some opening thoughts, the role that Traxtion has to play, and how you see yourselves contributing to some of this economic development we're talking about in the coming years.
Mike, thanks very much. So, you know, we're a rail operator, okay? So we own, we drive, we operate trains, we service trains. We've got a rail training center where we train people to drive trains and we train people to service trains. We do major service intervention on trains. You know, and we're a 37-year-old business that operates today in 7 countries in Africa. We touch about 110 locomotives on a daily basis in the 7 countries, and that makes us the largest private operator on the continent today. And, you know, to my mind, what's really interesting about where Africa is in its rail logistics journey is that if I go back 6 years ago, okay, I've run Traxtion now for 8 years. And if I go back 6 years, we could operate our trains in Mozambique. It was the only country that allowed private operators onto its network. And if you look today, we operate our trains in 7 countries, but we can operate trains today in Namibia, Zimbabwe, Mozambique, Zambia, Tanzania, DRC, and then in countries like in West Africa, like Ghana, Senegal, North Africa, we could operate in Egypt. And more countries are adopting this policy of what we call rail reform, but effectively it's allowing private operators to access the national network, just like private airlines can access a national airport. And more and more countries are adopting that. For example, Kenya has now got legislation in front of their cabinet to allow private operators to access the national track in Kenya. And that creates a world of opportunity that simply did not exist as little as 6 years ago. And of course, then we've got South Africa opening up, which is by some distance the largest freight market in the region and represents an incredible opportunity, not only to unlock massive growth for South Africa, but also, of course, for the regional rail operators. And you know, what gives us as a company real meaning is the leveraging impact of what we do. Our sort of company byline at the moment is Be Exponential, because when we deliver a rail service, let's say to a new mining complex in South Africa, shock horror, South Africa opens a new mine, and we would invest in, say, R1 billion of trains and employ 150 people. That's great. Okay, it's wonderful. 150 highly trained people go through our training center. But the real story is the 3,000 to 5,000 jobs that gets unlocked as a consequence of having a rail service. And that's the leveraging impact of a company like ours and, I guess, infrastructure on the continent.
It's a fantastic opening salvo. Thank you, Jamie. So something you touched on there, which is Africa is getting smaller. Your efforts developing rail infrastructure and running efficient services, and there's an interesting synergy around rail, whether it's payment rails, capital movements, technology infrastructure, and actual trains rolling on rails, where we're going to have a conversation about. But Africa has got smaller. So since 1950, the number of urban areas, people with 10,000 places with 10,000 residents or more has increased from about 500 in 1950 to almost 8,000 today, which just means that people all over Africa have much more access to those sort of urban type establishments. In 1950, they were on average 70 kilometers away from an urban area, and today it's 25 kilometers. For some in our audience, a short run. And we often hear about this demographic dividend, the growth of Africa being underpinned by the fact that we will host 25% of the world's population after 2050. And something that's often overlooked is that Africa will host the largest working class population in the coming decades. And so perhaps, Sim, we could just touch to you. Banking services have a critical role to play in infrastructure development. And where do you see some of these opportunities on the continent, and how might Standard Bank contribute to these developments?
Well, I mean, that's a great question. And sitting between these two great companies speaks to the role that a bank would be playing in this context. So to pick up what Jamie just said, 800 million people between now and 2050 will become urbanized in Africa. Africa will have the largest and youngest population in the world in 2050. Africans are going to be becoming more and more urbanized. Africa is going to have a large number of the largest cities in the world. Our colleagues have calculated that the continent will need roughly $3.4 trillion in infrastructure in the nature of rail, roads, bridges, telecoms, fiber, and so forth. And so what have you got? You've got a demographic dividend. So people, as I said, getting healthier, wealthier, and more productive, requiring more and more sophisticated products. They're going to get more and more connected. Mobile telephony penetration is still abysmally low, and I'm sure Charles will talk to you about that. Rail is still inadequate. Roads, the statistics are that less than 43% of Africans have got direct access to paved and functioning roads. So roads need to be paved and fixed. And so the consequence of that is that you're going to be needing capital, and you're going to be needing manufacturing capacity. You're going to be needing people that are more tech savvy. And therefore, all these businesses that are represented here today, and many of our clients, are going to benefit, whether they are consumer facing, a lot of Charles's clients, or corporate facing or infrastructure facing, James's clients.
And maybe, Charles, that's a good point to rest on. We've talked about growth in Africa is about the fundamentals, schools, roads, rail, but data infrastructure in particular. MTN has been recognized as one of the leading providers of 5G, LTE. And how do you see advancements in mobile technology influencing this fourth industrial revolution, which I think will support a lot of this fundamental development and rollout in Africa?
Yeah, look, Mike, I mean, if you look at the MTN base today in South Africa as an example, smartphone penetration on the SA network is about 80%. But if you go into the group, we've got a base of about 275 million customers. The data users, what we call active data users, which is our users who use over 5 MBs, which is absolutely not much. It's about 150 million. So almost 50% penetration of data users. So you've got a massive upside still that you still have to be able to allocate for. So even if you look at broader continent, I mean, you look at 5G is projected to be 17% by 2030. That's still quite small. So the level of mobile penetration, still very small in terms of level of access. So our role, I mean, outside South Africa into markets like Nigeria and Ghana is how do we accelerate device access? How do we bring more devices into the hands of the customers? And South Africa is a little bit more advanced in terms of fiber in the homes, slightly better than many of the markets in the continent. So in those countries who are trying to figure out how do we bring home connectivity for most of the people, just to bring that level of access. I mean, we've seen good growth. I mean, significant performance if you look at where we were before, but we need to be able to accelerate that if we are to actually open more people and bring them, close to the internet. And that's why, I mean, I'll give you one example, one project that we're driving. We call it Project East to West. We've signed a partnership with Africa 50. We're building 20,000 kilometers of fiber from East Africa into West Africa. Because the reality is that you've got a lot of undersea cables, wrapping Africa around, but you don't have a lot of terrestrial fiber to connect and bring fiber to most of the landlocked countries. So we're doing that. The 20,000 kilometers of fiber East to West project. That will help us in terms of what we call the fiber railroads, because we believe that for this to work, we need to be able to deliver much more access. And we're going to need that. To do that, you need terrestrial fiber to do that. The second one is fintech, financial inclusion. We're sitting on 75 million customers across our markets accessing financial services. We have a base of 275 million. So we still have about 270, we still have a base of about 200 million that needs to get access to financial services. We recently signed a deal with MasterCard, and I think we're looking for more partners, along that line as well, just to deliver much more services in terms of customers. Another partnership we're looking at is one of the asset classes is data centers. I mean, you look at South Africa, a little bit more advanced in terms of data centers, but there's a whole lot more opportunities in markets like Ghana. We're putting a data center in Zambia and also in Nigeria. So we're now forming up what we call a data center company, DCCo. What it's going to do is a proper carve out of that asset class, make sure that we can bring partners in to scale the level of investment. We do that because we're also looking at what's going to happen with AI, because all of us understand that fundamentally, AI will need a lot of computing power. So it's going to be computing power hungry, and obviously energy hungry. So we're going to work on that, data center side. So think about the business this way. Fintech, in terms of mobile financial services, inclusion, 75 million customers, we need to scale that. Partnerships, MasterCard, and other players. Data centers, carve it out into DCCo, bring partners, build more scale in terms of DCs. Fiber, we're setting up a fiber co, separate entity, bring in investors, and I spoke to you now about the East to West, driving fiber, terrestrial fiber access into the markets. We're also looking at broader digital services, how we're going to, because all this network we're creating, remember that we need to be able to put services on top of the network. So home services, digital solutions that are going to be, content and TV, to drive much more access. So we think that, I mean, for where Africa is today, I mean, we're very excited about the potential. We believe that we are super under indexed, in terms of, telephony, internet access, good progress, but I think there's a lot more to do going forward.
Fantastic. Thank you, Charles. Turning to you, James. Traxtion has become the largest rail operator in Africa under your leadership. What models for success have you found most effective in navigating some of the complexities? You mentioned multiple African markets, and how might other companies learn from your experiences on the ground?
So, Mike, I think that the rail industry in Africa is a story that we had to deliver to make people believe, okay? Because there had been such an extended period of poor rail logistics performance outside of South Africa, okay? And the reason for that was that you've had two ways that railways were operated in the past on the continent. The first was a state-owned monopoly, okay? And those have, with very few exceptions on the continent, failed, okay? And it was really sponsored by the World Bank. They went through a process sort of 15 to 20 years ago where they went through a concessioning process where they took the public monopoly and they concessioned it to a private party. And then you had a private monopoly operating those railways. And that model also, again, with very few exceptions, also failed. And the reason that failed was that the density, and really that's volumes, wasn't there to be able to sustain the maintenance of this critical infrastructure on one hand. And then on the other hand, from the moment that the concession was signed, you had a conflict between the interests of the concessionaire, which was dividends, and the interests of the government, which was to uplift the condition of the infrastructure. And you had real tension between the private operators and the state, to the extent that many of them were reversed, some of them even uncontractually reversed, which became quite controversial. The continent since then has moved away from that model into this open access model, where you have a network, let's say, and I'll use the Durban-Joburg line in South Africa as an example, where you have 72 slots in each direction each day. So you could run 72 trains in each direction each day. And then depending on sort of who you engage with, Transnet's running between 9 and 15 trains in each direction each day. There's a huge amount of latent capacity on that network. And the same applies to the rest of the continent. The Tazara line, for example, that runs to the port of Dar es Salaam and connects into the DRC and Zambian Copperbelt. That was built for about 4 million tons of freight capacity, and it moves about 650,000 tons at the absolute most in the last few years. And that translates to a lot of latent capacity. That latent capacity, when the private sector brings trains, creates income-generating opportunities. The challenge for us, for the state, by paying access charges for that infrastructure, just like you pay toll fees to put a car on the N3, or you would pay landing charges if you wanted to use one of our airports. So the challenge for us was to convince customers that we were going to be provide them with reliable services. So what we did was we brought a brand of rail services that the continent hasn't seen for a long period of time. We took new generation locomotives with really world-class services that stood behind them. We bought cabooses so that our crews would sleep on the train. So we never had crewing problems or delays associated with crewing. And we brought new wagon sets. So we had outstanding assets maintained to the highest standards, and we took away any crewing issues. We then took a process to control the controllables. And by that, we partnered with customers that were going to be able to load and offload our trains quickly, because the infrastructure is in poor condition. That's a given, okay? So the trains are going to be delayed on the lines from time to time, okay? Telecommunications on the lines don't exist. Signaling solutions on the line don't exist. We're getting manual paper warrants, things that existed when the Flying Scotsman was running 200 years ago, trains, okay? We're still getting paper warrants, okay? But we've controlled the controllables. Our trains are exceptionally reliable. Our driver crews are exceptionally trained. We've got 14,000 control documents that we use to use our operations in a very structured manner. And we've partnered with companies that turn our trains around on each end very quickly. And by controlling the controllables, we've been able to deliver a level of service that Africa hasn't seen for a very long time in rail logistics. And it's translating to a changing in mindset. And I think that's been that commitment to quality is, I think, been that sort of what's really been the recipe for us.
It's phenomenal. You mentioned strategic partnerships, and it's impossible to scale any business without partners. And perhaps, Sim, I know that you have fostered and developed several strategic partnerships over the years, and set Standard Bank up for future growth. How are some of your strategic partnerships contributing to Standard Bank's ambitious plans?
Well, Mike, perhaps let me give a couple of examples to illustrate the point. Perhaps the first one, and perhaps one of the most important, is Charles will tell you a story that he's just returned from China. The board of MTN and the executive visited China. And one of the stops they made there entailed a set of conversations between the Industrial and Commercial Bank of China and Standard Bank people based in Beijing, where they were given a perspective about the China-Africa corridor, the movement of goods, people, capital, and ideas between China and the African continent. In fact, he will tell you that they've got contrasting views. The one view would have been from the Standard Bank people who are sort of independent. The other view would have been the economists from ICBC, which have been the party line. And I bet you they gave you slightly different perspectives. ICBC is a 20% shareholder in Standard Bank. And Standard Bank, through its partnership with ICBC, amongst other things, has facilitated trade to the extent of roughly $70 billion between China and Africa. We service clients such as Huawei, who are partners of MTN in the rollout of infrastructure on the African continent. We send wine merchants from the Western Cape through our relationship between ICBC and Standard Bank. So that's the one type of partnership. The second type of partnership is, again, to Charles's point, we are moving to the cloud. And we've got two partners as far as that goes. The one is AWS, that's for our front-facing customers or front-facing activity. And the back office is done with Microsoft. The third one, along similar lines, is a partnership we've got with Salesforce. We use Salesforce for our client engagement tools. One of the most interesting things about that relationship is that they've got a program called Trailhead, which I spoke to you about. Now, Trailhead is a democratized learning program. Joe Soap can simply get on the website, get on that program, and they can learn how to code. So it's democratized, it's part of the development on the continent. And we're using those relationships with those three people to build capability, engineering capability, software engineering on the continent. The last example, and then I'll stop with that example of a partnership, is we've got a partnership with General Electric. We agreed with them to fund the sale of equipment in the health space in partnership with them. So we provide the funding, they provide the equipment, and we've done that in South Africa, in Angola, in Nigeria, and in Kenya, making a real difference to the soft and hard infrastructure. Hard infrastructure, the stuff that Charles and James produce, but then also the soft infrastructure, health. Now, health is fundamental. Health and education are fundamental to the productivity on the African continent. So trade and investment, ICBC. Some of our client experience and our own product and service delivery, AWS, Microsoft. Soft infrastructure for African people in the nature of health, our relationship with GE.
Thank you, Sim. You're touching on topics of innovation and centers of excellence. And maybe, Charles, I could just invite you, people throw about the word Silicon Valley of Africa. It seems we might have multiple centers of innovation and excellence. And maybe you could just give us some insights into some of the interesting developments that you're seeing happening in those locations and what you're keeping your eye on.
Yeah, I mean, the first thing, I mean, I always say that pretty much every company in the future is going to be a software or a tech company. You know, I mean, I like Sim was saying, we went to go and visit Alipay when we were in Shenzhen, and you look at what they've done and what they are now commercializing in terms of their platform. And in essence, you might say they're a payment company, but essentially they're a tech company just doing payment. So what they've managed to build is a very strong computing layer, but their biggest competence is software. And then at the top of that, what they're able to do is to orchestrate business models. Now, I'm saying this because, in essence, everything that's going to happen in the future is going to be based on strong computing power. Like Sim was talking about the cloud, is strong computing power and then software development. That's really what's going to happen today. So if you look at the Cape Town Stellenbosch corridor, what we call the Silicon Valley of SA, I think in that you've got about 450 startups, tech startups in that area. I think they're employing, if I'm not wrong, about 40,000 people employed there. You're looking at potential, I think, $83 million already paid and invested by a number of VCs into the ecosystem. And most of them, pretty much all of them, all they focus on is software development. And then they use the software development to integrate and, develop different business models. So we want to play a part in that. And one of the things that we do is that we partnered with Stellenbosch at the university. We're providing a capability in terms of funding, access to the network, to enable the level of innovation in that particular space. So we want to be a part of that ecosystem that's happening there. In Nigeria, Nigeria is also developing quite nicely, I think, especially around financial services in terms of payment. Many people will remember Nigeria in terms of Paystack. Paystack was bought by Stripe. They facilitate payments largely for, I think they do for about 60% of Nigerian business today. So you got that, you got Flutterwave and all of that. That ecosystem is building quite nicely. And MTN is also, MTN Nigeria participating in that to enable it and to support it. In Ghana, you're seeing that. In Ghana, we've built what you call a digital hub. So it basically is a hub that houses different entrepreneurs, techpreneurs like they call them, to come with ideas. But we're giving them room, we give them access, we give them data access, internet access for them to come up with ideas, develop code, and come up with business solutions. So that's happening in that particular market. But I mean, you see also in Kenya. Kenya is doing that quite significantly. They've got a big ambition of, I think it's a 5,000-acre land they're building. They call it Konza a tech hub. They want to make that the key anchor of software development in East Africa. So the point that I like to make all the time, I always say that the future is all about software and the curiosity to imagine new business models, period, for any business. Be it a traditional banking business, be a real business, in the end, it's going to be based on the ability to be able to orchestrate, develop new software, and then be able to develop new business models. So that is really the biggest focus for MTN, much more supporting of the ecosystem of software developers with a number of partners.
Mike, if you don't mind, if I could just pick up on something that Charles has said, just two interesting statistics. There are 600 tech hubs on the African continent. That's one. And then Johannesburg, Cape Town, and Stellenbosch are believed to be as good in terms of the ecosystems as Tel Aviv, Mumbai, Berlin, and indeed Silicon Valley. So that's the one thing. The second one, the size of this tech opportunity by 2050 is going to be roughly $800 billion. I mean, it is a massive opportunity. So if people in your audience can just imagine the possibilities and the opportunities, and think about the fact that our own Johannesburg, Cape Town, and then there's Kenya, Nairobi. Nairobi actually, I hate to admit it as a South African, is actually even more advanced than South Africa in terms of the know-how, the digital skills, the innovations that are happening. Just thought I'd support what Charles was saying.
And there's an interesting business model whereby software flattens the world. So you can export a piece of software to Asia or the US or Australia, and you can have your lower cost base in South Africa and Africa, but the same quality or even better, like you said. So,
and the actual opportunity though is to move that software development, that productivity onto the African continent, make ourselves more competitive than other parts of the world, move those value chains to Africa.
And just to add on that, Mike, I mean, especially on the point that you're making, there's a group they call themselves Andela in Nigeria. They come up with a concept where they're training young software developers, but they're not training them for the African market. I mean, they're training them to deploy and develop software for international companies. I mean, today they're deploying software on a 24/7 clock, for companies in New York, companies in London, and that just comes from a very basic place. In Nigeria, set up a very nice entity, training those young people. There's the power of software development. It's cross-border, so you're not limited about, where you are. The same way as software businesses are so cross-border, that is the power of software, like you say. Thanks.
Something you mentioned there, Charles, which was cross-border, and maybe James, we could just touch on policy frameworks, because it's one thing innovating software, business models, etc. But if you can't move your trains across the border, or they spend 60 hours at Byte Bridge, then you're not able to do business. So maybe could we touch on potential harmonization, policy reforms that you see really great opportunities within your sector?
So I think, we've made so much advancement in a short period of time on the continent in terms of harmonizing the ability for private operators to access the national rail network. that we've made great strides, okay? The biggest market, of course, and the biggest regional economy by some distance, and certainly the biggest freight economy, is South Africa. And we're on the cusp of implementation now in South Africa, okay? We started the journey in South Africa 14 years ago for rail reform when the Green Paper came out. But it's really accelerated in the last 3 years when the logistics crisis really hit South Africa, okay? And in many ways, Africa overtook us, and we started first, and Africa's overtaken us, and now we're catching up. But once South Africa has implemented the reform, okay, the opportunity to develop a Pan-African rail operation of scale is here, okay, for the first time in many generations, like, probably the first time ever. And that, to my mind, is a really exciting moment for the continent, because, you know, I was reading an article by the Gain Institute this morning, and they firstly said, you know, 4.5% of GDP was lost in 2023 in South Africa because of not being able to get the rail transport right into the country and to the volumes that we needed, and 6% in 2022 when we had the commodity price boom. And that's huge. It kind of gives you a sense of how big it is. But in addition to that, there were two things that were really interesting. The one is that the total cost in South Africa, and we can use in South Africa, and we can use South Africa as a proxy for Africa. The total cost of agriculture in of the total cost of agriculture in South Africa, logistics is 51%, and for mining it's 41%. Okay, so logistics is the biggest single cost element for the upstream economy, okay? So having competitive logistics is everything, okay? And then if you look at...
just to make it practical, what you're saying is, if you can make your rail network efficient and, for example, roll through multiple borders without hindrance, then there's a really big chunk of costs at the moment effectively end consumers are bearing eventually, which you could potentially start to extract out of the system.
Absolutely.
And pass those savings on to customers.
And it talks 100% to the competitiveness of the upstream economy. And you know, in South Africa, we have transit that employs 50,000 people and upstream economy that employs 16 million people. Okay, are we designing policy for the upstream economy, or are we designing policy for that company? Okay, and in South Africa, we're designing policy for the upstream economy, but that's a change. That's a change that's come in the last 3 years in South Africa, and it's been implemented fast. And we have to give the government and the Department of Transport a lot of kudos for the speed of implementation. When they realized they had to do it, it's happened fast. Okay, and we're on the cusp now of implementation, and we can go into that a bit more. But
just give us a practical example of what that means for your business at the border or crossing countries.
So if you look at, I'll give you an example of two rail operations. We run a train where we take copper out of Ndola, which is the sort of logistics heart of the DRC and Zambian copper belt. And we run a train 1,975 kilometers with copper and containers to Dar es Salaam, and we take sulfur back, okay? Very similar to the example I used before, where the crew stays with the train continues to go, the train runs quite slowly. But the transit time for that 1,975 kilometers is about 5.5 days, okay? If you tell a Western European that, or an American that, they would be a bit confused, I think, but because that's pretty slow. But what's interesting, Mike, is that on the north-south rail corridor, where you have 3 different railways running a train. You have Zambia Railways that runs it to Livingston. You have Grindrod under their concession running it from Livingston to Beitbridge, and then you have Transnet running it from Beitbridge down to Durban. Transit time there is anything between 21 and 42 days. Okay, so we 5.5 days, they're 21 to 42 days. Okay, it takes a truck about 8 days to get to Durban. It takes a truck about 7 days to get to Dar es Salaam. We're the fastest, and our train never goes faster than 50 kilometers an hour. Most of the time, it's going slower. Okay, and the reason for that is our train does not stop. When we cross the Nakondo border from Zambia into Tanzania, our train doesn't stop. Our goods are pre-cleared, and we continue to roll across the border. One set of locomotives, one crew hauling across the border. Now, the moment that South Africa changes, okay, and you can have a train originating in South Africa, taking manufactured goods from South Africa into the region, That's an efficiency that we've never had before, at a train that doesn't stop, okay? And now, for a moment, think about Germany, okay? The industrial powerhouse of Europe. Do you think Germany would be anything of what they are if they didn't have extremely efficient access to their European market? It's the fundamentals on which they stand on. And that is what's changing into the future. And when you look into the long-term future of Africa, that's changing. It's cheaper to get something from China to Dar es Salaam than South Africa to Dar es Salaam. And that's fundamentally wrong.
And I guess low-hanging fruits in business speak, so potentially transformative. Sim, while we're on the topic of policy and innovation and potentially extracting efficiencies, what might be some of the regulatory developments or harmonization reforms that are happening in capital markets and payments across Africa that you're really optimistic about or you're keeping a close eye on?
And yeah, thank you very much, Mark. I mean, just again, to pick up from James' point about harmonization, I think the most exciting thing on the go at the moment is actually the Africa continental free trade area. It's huge. It's massive. The world is going into beggar thy neighbor, lift your borders, whereas we in Africa are talking about a population of 1.3 billion people, GDP of $3 trillion. We're talking about a massive population, increasing trade within Africa. At the moment, it's roughly 15%, improving our ability to trade with the EU, our ability to trade with China, and our ability to trade with the US. And the way, in essence, that will be happening is by reducing tariffs, but importantly, reducing the non-tariff barriers, getting rid of the bribery and corruption happening at borders, harmonizing policies, harmonizing rules, harmonizing the contracting, to make it easier then to move goods around. From a financial perspective, one of the offshoots of the African Continental Free Trade Area is a system called PAPS, the Pan-African Payment and Settlement System. Again, I'm sure Charles can talk about that as well. It entails 60 banks. 60 banks have signed up, of which we are one, and there's another South African which is signed up. And that will arrange a system in terms of which we're making payments in African currencies as opposed to using another currency which goes through another country, adds to the cost, messes up foreign exchange, and payments will then become simpler. Forgive me for saying simpler, better, faster. It's an incredibly exciting prospect. It'll reduce the cost of people buying and selling their goods. It'll be faster. It'll improve the foreign exchange position of countries. It'll improve trading on the continent. Trade, as you can tell, in my view, is actually the single biggest opportunity for the African continent. Improving the amount of trade happening within Africa is a massive opportunity. Again, Charles's point around, we do more trade with the EU than we do with ourselves. Improving the manufacturing capability on the African continent, it's better for the continent to export than it is to import, just in simple terms. So these are the exciting opportunities. Yeah, the AfCFTA is just a game changer. It'll reduce poverty by 50 million people. It'll add to income by 9%. It'll double trade on the continent by 2050. It's just incredibly exciting.
And how far down the line is that piece of work?
Countries have signed up. 54 countries are signed up. The harmonization is starting to happen. PAPS, that I'm referring to, is happening. We signed up. We're talking about the pipes. We're doing the proofs of concepts. People are starting to move goods already. I mean, it's incredibly exciting.
While I have you, Sim, you touched on how everyone else is throwing up their borders and we're saying we're open for business. Africa is not an island. We exist in a global macroeconomic scenario.
Yeah.
And there's these sort of mega trends happening, US hegemony waning, China is increasingly stronger. India has certainly made its impact on growth. How are some of these sort of macro geopolitical trends shaping how companies in Africa respond to those and take advantage of those opportunities or actual changes in how we're doing business?
Yeah, I think that's the $1 million question. You made reference to factfulness. Another book I think that people would really enjoy is by Matt Ridley, and it's called The Rational Optimist. And we as South Africans, and I know Charles and James agree with this, take the view that we are glass half full people. We see opportunities, we understand the risks, so therefore we're not pessimists, but we're rational optimists. Larry Fink, in his letter to his shareholders, makes this point as well. You're not going to make investments if you're a pessimist. Good leaders are optimistic. They see risks, they see problems, and they see opportunities. So the global scenario you could see as a catastrophe and slit your wrists and want to give up, or you could say, actually, for Africans, it's an opportunity. It's an opportunity in a way similar to what the Vietnamese say, to what the Latin Americans say, to the French, to the Germans, to the Singaporeans, which is essentially that you must do what you think is in the best interest of your country. Don't take sides, but do what is right for the country. Serbia actually is the last one, the latest one that I've seen on that list, where they're basically saying, Australia is another one. We're not going to take sides. We're not going to do dumb things, but we're going to do what's right for our country. The Latin Americans call it strategic non-alignment. The South Africans call it active non-alignment. Now, the Americans will say, Deputy Secretary Nuland, when she was here and when she was going back to the States, made the point that when you are non-aligned, then you must be non-aligned. As opposed to saying you're non-aligned and then acting in a way that is aligned. So the superpowers understand this and they respect it. The opportunities are there's going to be dislocation of value chains. So the winners are going to be those that take advantage of that. What are the examples? Think about Mauritius. Mauritius is inserting itself in the Indian Ocean value chains. Ethiopia is doing the same. Kenya is doing the same. So the winners are going to be those that identify where light manufacturing is going to happen, use their own infrastructure to take advantage of that manufacturing. They're going to figure out what they're going to do with their rare earth minerals and work with logistics companies to make sure that we take advantage and not lose the opportunity that arises from the super cycle and let others win that game. They're going to look at integrating value chains to take advantage of all of these opportunities. Just to think about it from a Standard Bank perspective, we facilitated trade at Standard Bank of roughly 950 billion rand last year, and as I said, of which about 70 was with China. That number can be multiples if we play our cards right. Lastly, let me just say, again, you could take the view that there's this Thucydides trap that China and America will end up in a hot war. We think that outcome is improbable. The most likely scenario is greater competition, more friction, a tougher environment. Then you got to ask yourself, well, how do you position your business to avoid the traps that might arise? Think of sanctions. What are the most likely sanctions? How do you avoid getting caught up in those environments? Where the capital and goods going to come from and where they're going to go? How do you position yourself to take advantage of them? So the summary is that the winners are going to be those that figure this out.
Yeah. Charles, that's quite an important topic that Sim's touched on.
Yeah.
Any thoughts from MTN's perspective on how to position for the future, taking into account some of these global mega trends in terms of political shifts, we're moving
Yeah.
towards a multipolar world as opposed to US hegemony?
Yeah, I mean, look, first of all, the impact, I think, Sam is talking about China and the US, the implication for that. That also talks to the tech choices that you have to make. You know, if you are going to do cloud decisions, where you're going to put your cloud for that, you know, so you know, what partners are you going to go with? If you look at the MTN network today in South Africa, 80% of this network is driven by ZTE and Huawei. These are Chinese-based companies. Pretty much in all the markets, it will be about a 60% Chinese-based network. You know, there's a time when we used to have in this market 100% Ericsson network. Today, we're a blend of three. ZTE at 20%, Huawei at 60%, and Ericsson at 20%. So that balance of how you play and the choices that you make and how you position a business, like you're saying, is going to be very, very important. And like the point of saying, how do you avoid the traps, the risk traps that you're dealing with? So that's how we see it. And I think as MTN, I mean, we'll remain practical and sensible in terms of aligning and supporting the posture of South Africa in terms of and the continent in terms of which area we need to go. I mean, it's very clear now that, you know, even as corporates, you know, it's not easy to say as a corporate, no, we are just non-aligned. I think we also have to be, in a way, to be seen to be supporting where the continent also is leaning towards. So that's how we see it. Yeah.
As Nkwame Nkrumah said, we look neither east nor west, we look forward.
Yeah.
Charles, while I have you,
Sure.
When it comes to technology businesses, you often hear speak of platforms,
Sure.
Platform ecosystems, and as part of your transformation, I'm sure you're looking at potentially new business models or alternate revenue streams. How do you see that from an MTN perspective within Africa?
Sure. You know, I mean, the one key point I'll make is that, you know, we should not, as a continent, be left behind when it comes to digital revolution. You know, people say we might have missed the previous revolution, but we should not miss the digital revolution. And that's why the anchor for MTN is simple. You know, we want to build platforms for Africa's progress. Those platforms manifest in many ways, but one of the key platforms that we are very strong at and that we are doing, like I said before, is the fintech platform, 75 million customers on top of that. And for us to be able to grow that, whether it's going to be on lending, whether it's going to be on insurance product, whether it's going to be on payment, we're bringing partners like MasterCard to be able to help us to be able to do that. We're also building, there's a company that we're building called Chenosis. Now, Chenosis is an API company. So basically facilitate exchange, data exchange between multiple companies. Because if you look at any software business, you know, whether it's a Facebook or WeChat, and all of these companies are actually an amalgamation of APIs. They're just software companies, aggregate different people's software, and then they build new businesses. We want to facilitate that. We want to take part in that. And also the point about AI, I mean, I always talk about AI and say, unless you are Mr. One of NVIDIA, not many people have made many gains on AI yet, you know, so the game is just getting started. We want to play in that. And where we want to play is to enable the ecosystem around data infrastructure. And that's why our play in terms of DCCO. So we want to build data centers in Africa, invest in data centers in this continent to be able to facilitate that. Because like I said, it's going to be about power and who's got land, because you're going to need big amount of space and energy to be able to power those data centers. So that's the biggest focus that we have.
Okay.
Yeah.
Sim, I know you want to jump in on platform businesses. Standard Bank has, you know, several initiatives across the continent. What is maybe a good example of a platform business within Africa, which will help facilitate some of Standard Bank's growth into the future?
You know, Mike, the bank actually is the original platform business. The word bank is derived from the Latin word banca, which was basically a platform in the temple where people used to receive money, deposits, and they used to on-lend that money to somebody else. So we're the original platform. The best example actually that I think would mean a lot to people is in the business we call global markets, where we facilitate MTN needs to buy and sell Forex, or they need to borrow. And we will buy some Forex from somebody else at a particular price and sell that Forex to Charles at a different price. We'll use our IT systems, our platform, to write the contracts between the consumer and the producer of that product. That is an example of a platform. We will use Salesforce, so our traders will use Salesforce to analyze the needs of the client, the consumer, MTN. We'll use their tech platform to make that analysis, to identify what products and services that they need, at what price would they be willing to pay. And we'll use AWS to store the information in our cloud using the AWS platform. So I guess there are two types of platforms in that conversation. The one platform is the technology platform, whether it be MTN, because we sometimes use their call center, then their data center, for example, in Nigeria. Or the bank is the platform in global markets where we're buying and selling Forex, servicing consumers and producers.
Brilliant. James, to touch on software innovation and development is kind of a strange thing within rail networks. You've got typically these big steel beasts lumbering down a track, but you also have to exchange information. Do you have any examples for us around software development innovation within the rail space that's helping you and your business?
Mike, thanks. Actually, it's a lovely question, because in the rail world, what's interesting is that mechanical innovation hasn't moved much. If you look at an engine that in a locomotive that's 14 years old, or you look at a brand new engine, there's not much innovation. Okay, they're quite similar. A locomotive that was procured 3 years ago, actually, in some instances, is using exactly the same engine that we use in a part of our fleet that's now 14 years old. But what's moved in giant leaps is the technology as to how that engine creates power, to power the different components of a locomotive, and then the telemetry that stands behind each component into how the component is performing, and then the maintenance that stands behind those components, and then the communication of that information into a central maintenance hub and into maintenance software that then predicts when maintenance interventions need to be done. That's moved hugely. And then on the other side, you've got signaling innovations, which are like truly remarkable. The signaling in South Africa was designed in the 70s, implemented in the 80s. We've got the trackside lights that you would see when you drive around South Africa. And really what trains do now, forgive me for the detail, I've turned into a railhead, but trains move from here to, if a train's moving from here to here to here, okay? A train moves from here to here, waits for its next authority to move, moves from there to there, waits for its next authority to move, and moves from there to there. The way the trains move now is they no longer move in static blocks. They move in what's called moving blocks. So the trains move across the system together like this. As long as there's that minimum following distance, they move together. We have a system here where we don't even know, once a train's departed here, we don't know where it is until it's got there. So you can't have two trains into the same section, even if the trains are 6 hours apart. Okay? Now you can imagine the efficiency that you can have if you can run trains closer together. They don't actually do it, but in Australia, in Western Australia, they have the ability to run kilometer-long trains 5 minutes apart. That's turning a railway line into a conveyor belt. It's extraordinary. Now imagine what you can do with a coal line in South Africa, where the 200-wagon coal trains operate an hour apart. Okay, and then we run general freight trains on the half hour. Okay, the ability to unlock technology is extraordinary. The Durban-Joburg line was designed for an 18-hour transit. Okay, and when it was put out for concession last year, which was subsequently reversed, we put a consortium together. It was really interesting about how much interest we had for equity. We had a brilliant blue bank that was going to financially advise us, and who really was interested in debt funding as well. So we had great equity interest, great debt interest. But again, as a railhead, the thing that got me really excited is that we did some initial simulations as to how quickly you can get a train from City Deep into Bayhead, okay, using modern signaling technologies. And you could go from 18 hours with no upgrades of the line, Okay, so just bringing it back to good condition. It needs an upgrade. Okay, it's in poor condition now. It needs an upgrade. Just to take it back to its design condition. 120 kilometers an hour on the straights, 60 kilometers an hour on the curves, and we took the transit time from 18 hours to 9 hours and 52 minutes. Okay, that means with one driver, one shift, you can take a train from City Deep with 100 containers into Bayhead, and Bayhead's the last marshalling yard before you get to the Durban container terminal. Okay, that's extraordinary efficiency without having to change railways to reduce curves, which is all possible for the future. Small interventions, massive changes, and it just comes down to technology. Same trains, same technology we've been operating for a decade. It's amazing stuff.
So Traxtion is also potentially a fintech business.
Yeah, for sure.
Sim, what would you say to South African financial advisors? Over the last 20 years, we have seen in fits and starts, but quite a bit of private capital leaving the country. Lots of demand for offshore unit trust funds, offshore endowment type products. It slowed down at one point and then it picked up again. What would you say to South Africans who are looking forward 25 years in terms of their exposure to global markets, Africa, and South Africa in particular?
I would say, diversifying a portfolio is a rational thing to do. I would say you would need to make sure that that diversification is based on the relevant person's risk tolerance. But I would say, remember though, that South Africa is a $400 billion economy. Growing at 1.2% is one trajectory. Growing at 3.5% is a different trajectory. And we're at a point today where the probability of trend growth being at 3.5% is significantly better than it's been in the last 10 to 15 years. I would say in that portfolio, think very, very carefully about your exposure to the African continent. And the best way to get that exposure is by being invested in great companies like MTN, which have got exposure on the African continent. I would say to the extent that you are comfortable with asset classes that are private, that have got exposure into the African continent, and you've got the risk tolerance, definitely look at the fastest growing parts of the continent, which are East Africa. Kenya, Tanzania, Uganda growing at above 5%. In the case of Kenya, they've been growing at above 5% since the noughties. Compound that and it suddenly becomes quite exciting. The continent generally, as I've said, in the next 20 to 30 years is going to be the fastest growing continent in the world. Is going to get increasingly more integrated, so your returns are going to be significantly higher. Lastly, I would say, remember there is the Africa Perception Risk Premium. In which world is Brazil less risky than South Africa? They rated the same, but the risk premium is significantly higher for South Africa. Whereas we've got great institutions. Our GNU has just committed to the constitution. They've committed to Operation Vulindlela. We closed our coalition government in our country in a matter of days and weeks. The great Netherlands took half a year. Belgium took 560 days. My point with those examples is that things actually work in this country. It's very exciting. Things are dilapidated, but they're in advanced stages of being fixed. The continent, lots of infrastructure being fixed. James gave you an example that 6 years ago you were struggling to move in more than one country. You're now doing 6, you said. 7. It's incredibly exciting. Yeah.
I know you want to add to that, Charles. What would you say?
The big thing for us is that the investment case for South Africa and Africa is very solid. We are fully committed. It is forecasted that by 2030, the MNOs in this continent will spend about $75 billion on infrastructure. That is on the network, that's on data centers and all of that. That is what's forecast by the GSMA. the level of internet penetration is still very low in this market. The number of youth, 50% under 15, demographic dividend. We think there's a role to play. So we believe that really, even if you look at the traffic profile in terms of data traffic, I mean, still very much less. I mean, the trajectory, we expect that by 2030, the data traffic in this continent will 3x. That means, more usage, more gains for any operators in this market. So generally, the case for investment, the case to lean in and support is very clear, whether it's going to be in financial services. And you can also bring elements of agri-tech into this, because we're also now working into agriculture, how we bring tech into agriculture. We can also bring health tech into it. You can bring edu-tech as well, because in this South Africa today, I mean, we've got what you call the MTN online school. This is a developed platform to help to enable education. Because again, if you think about the level of infrastructure that's required to bring many of these students, or in terms of education acceleration, you're not going to achieve it. The easier we're going to achieve this is by getting handsets into the hands of South Africans and Africans, and then enabling digital platforms for them to access education. So we're going to leapfrog and be able to do that. So the opportunities to make a difference, the opportunities for upsides, very clear for us going forward and very exciting.
James, perhaps just one slight variation on that question before we ask our panelists to sort of wrap up with closing remarks. We often in South Africa, we're eternally pessimists. There's always something wrong. And if you live in South Africa, if you experience a pothole in Joburg or too much rain in Cape Town, we don't always compare that or have the experience of that similar experience across the continent. So there's plenty of innovation and excellence, but actually our level of infrastructure in South Africa is way ahead of many places in Africa. So maybe just your take on, are you a net optimist at the moment? Where do you sit on that scale?
Mike, in our business, you always got to start with the freight, okay? Because if there's no freight, there's nothing for us to move, okay? So you've got to start with the freight. And in our industry, the freight opportunity in South Africa is truly remarkable. You've got transit that's moved from 226 million tons in 2018 to 149 million tons in 2023, 149 million tons in 2023. There's 77 million ton drop in total volumes, okay? At the time of the economic reconstruction and recovery plan, when access for private operators to the core network was first announced, the Rail Association did a study into how much volume wants to move from road to rail at the time, and that volume was about 50 million tons. You're looking at a freight body in South Africa that can move, that is potentially available for incremental train movement of well north of 100 million tons. To give you a sense, that needs about 125 billion rand of trains, okay? Then you've got a policy of government, and you've got a PSP unit that's in the process of delivery under Vulindlela in the Department of Transport right now, that is going to be setting the terms and conditions for concession projects for railways and ports in South Africa to uplift the condition of the infrastructure, okay? Those are once in multi-generational opportunities to uplift the condition to make significant investments to improving the efficiency of the upstream economy. It's a great opportunity for investors, but mostly it's a great opportunity for the freight owners that use that infrastructure, whose businesses will become more competitive as a consequence of having a train going from Johannesburg into port reliably in 9 hours and 52 minutes, okay? To my mind, we have not considered in South Africa the enormous benefits that this efficiency is going to bring. And the spin-off opportunities that you get from these investments into these critical infrastructures. Look at what amazing returns the Port of Maputo has delivered for Grindrod over the last 15 years since they made that investment. And it was businesses that have spun out of that opportunity that were never considered in that first business case that went to the board 15 years ago. But it's because it's a critical piece of infrastructure that snowballs. You enter into this self-fulfilling cycle of success. And we've never thought that like that in South Africa. And for the first time, we're going to be entering into this world. And this time of hardship, to my mind, has enabled us to get into the reform era. And that reform era, as Sim said, is going to unlock a 3.5% growth trajectory, which is fundamentally different for the country. I'm certainly, it's a vital moment. Okay, like I talk about this often as the most exciting and the most terrifying moment in railways in South Africa, because we don't fix it now, we're in trouble. Okay, because the infrastructure is in bad condition and getting worse. It needs investment and it needs it quick. But the plan of government makes a lot of sense, and that turns me into an optimist.
Critical moment, time to roll our sleeves up and do the hard work. And the sense that I get is that there's a political will to champion those changes, to push through the development and take advantage of these potential opportunities in front of us.
Yeah, I was at the Vulindlela 2.0. I presented at the Vulindlela 2.0 feedback session or conference week before last. And it's exactly that. There's the commitment is 100% there from government to roll out these reforms and to double down and deliver them. And the GNU is 100% behind it. There's alignment there.
Fantastic. So unfortunately, we're running out of time, but I think I've tested you well on your subject matter. Perhaps if you could just take a turn, Charles, Sim, and James, and just invite you to offer any closing remarks, any points you feel you wanted to double down on or emphasize, and bring us home.
Mike, thanks, and thanks for the invite. I mean, there's a point that Sim made about urbanization. I just want to go back to that point as I close. I think today in this continent, there's only 2 cities that's got over 10 million people. I think there's Cairo and Lagos. I think it's forecasted by 2040, we'll have about 12 cities in that bracket, over 10 million people. It's also forecasted that by 2040, there'll be about 19 cities that have about 5 to 10 million people. Today, I think there's about 10 of that. So 9 more cities are going to come upstream. This continent is urbanizing at the highest rate. I think is the highest pace of urbanization on the planet at this particular point. And we all know that growth, one of the variables of growth is urbanization, because most of these key cities are growing higher than the national average. So you can expect that as we urbanize, there's going to be significant amount of growth. What that does mean for us, it means that more people to use our services, more people to access financial services, more people to access digital services, more people to access the internet. So again, like I go back and say, the case is very, very much compelling. So as I close, I want to say to the colleagues on the call to say MTN, 30 years old, $10 billion organization, number 2 and number 1 and number 2 in all the markets in which you operate, 295 million customers. 150 million of those customers using data, 75 million customers on financial services. And we're just getting started. Thank you.
Thank you, Charles. Sim, your thoughts?
I would say just think about the symbolism of the conversation we're having. In our case, we got our partners in Traxtion. They're going to be participating in the rollout of infrastructure on the continent, including South Africa, of $3.4 trillion in the next couple of decades. Surely you want to be part of that. You got MTN participated in the world's best auction in South Africa. And we ought to be proud of it. And they're going to be investing, rolling out their 5G. They did the same in Nigeria, 2020, was it?
That's right.
And you committed $1.6 billion. So Africa is open for business. South African corporates who are multinationals and operating in many jurisdictions are open for business. And the opportunities are vast for those facing retail customers and facing corporate customers. You couldn't be more excited about what is going to be happening on the continent. So thank you, Mike.
Thank you, Sim. James, any closing remarks?
Mike, I think that it's a vital moment in South Africa. It's a very very interesting time in Africa, where we are changing the way that we've done things for a very long period of time, and I think those changes are going to translate to huge efficiencies, which are going to be really stimulating for growth in the upstream economy. And in this world, the first train ran in South Africa 163 years ago. Okay, no, that's wrong. 164 years. And and really from that time, South Africa's railways were used by the nationalist government for certain political ends. It was used by our previous government to push a different agenda. And now it's opening up. Not that Transnet is in any way going to be less important for the South African economy. Transnet's vital for the South African economy, and it always will be. But the opportunities around it are opening up for the first time. And think about how many generations of people have sat in these chairs over that 164 years, wishing for it to open up.
Mm-hmm.
And it's opening up today. It's an opportunity, I think, that needs to be taken.
Fantastic. Ladies and gentlemen, what an incredible session we've had today. Sim, Charles, Jamie, really, thank you so much for being with us today and offering us your insights. It's phenomenal to think that whether it's virtual information rails or physical trains on a track, or payment rails for that matter, the infrastructure and the opportunities that exist before us in Africa are very clear. To the wealth managers in the audience, you now have a treasure trove of knowledge to take back to your clients, and we certainly hope that we've equipped you to have some insights to elevate those conversations and guide your clients through some interesting opportunities over the next 20 years. As we drive forward, it's not just about seeing Africa as our home, but truly driving her growth, as Sim would say. Let's embrace the technological advancements that Charles has highlighted and progress the transportation infrastructure development that James has passionately discussed. A huge thank you to our brilliant panelists, sharing their wisdom, and all of you for joining in to this year's INN8 Elephant in the Room. We're INN8, we're the advisor's partner. Goodbye and have a fantastic day.
INN8 is a registered trademark of Stanlib Wealth Management Pty Limited, an authorized financial services provider.